Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, April 10th. Michael Boutros here with you this morning. Pete, Peter, oh, we got 4 Pete's in here today. Wow. Pooja, it was great to see you. Kelly, Chris, good morning to everyone in the room. So we're trading at some really interesting levels. Again, on some of the dollar majors, we've seen some price action breaks in overnight trade. Interestingly enough, coming into the session, I just reflected on this Bloomberg. Kiwi, Aussie, and Sterling are actually the strongest performers so far. Dollar seems to be taking it on the chin across the board, save yen. And we'll go over dollar yen as well. So on the menu for today, I do want to start off just by looking at the SPX. So we'll take a quick look at those near-term levels. Dollar CAD, Euro CAD, and Sterling CAD from last night. We'll take another roundabout look at dollar Swiss, dollar yen, and euro dollar. And we will sneak the DXY in there somewhere as well. So if you heard, didn't hear something, or if you have any specific trade setups or questions at any time, guys, do always feel free. Jay, good morning to you, sir. Always a pleasure. So really quick, before we get started, I think we're coming off some pretty big levels here in the SPX. We were looking at this weekly chart for some time, really highlighting 2 key levels for the last couple of weeks, and it's been 25.86, and it's been this longer running 52-week moving average, where we caught the lows basically last week. 25.60, I think what we noted, 25.55. You saw with the reaction that we got last week, okay, momentum turning right here ahead of 40, well ahead of 40. So we're not out of the woods yet on a resumption higher, but at the same time, you're at uptrend support. So the pivot is there. Levels remain unchanged. A weekly close even below 25.86 would be very problematic. And if we break and close back above this median line, then that puts us on the recovery mode. So as far as broader risk assets is concerned, this is right here, center stage. Now, with markets especially, there's still going to be a lot of headline risks with, I think President Xi is going to make some sort of comments here from China, and this whole trade war thing is going to shake things up back and forth. But just keep the objective approach on what the weekly charts are saying for the SPX. Now, within the confines of this turn here, it does look interesting. This is the weekly chart, right? Obviously, the low week close has been invalidated here a couple times on a multiple closes for a weekly basis. So the focus is still on structural support with this parallel and that 52-week moving average. Daily chart looks like this. Again, same slope, a parallel off that swing low from November of 2016. Perfect touch of support and hold. This is also where the 52-week moving average is. There's that 618 extension at 25.86. Now, we did get one daily close here just below, okay? Markets don't work in a vacuum. It was on divergence, okay, in price. As price action made a lower low, the oscillator made a higher low. And we haven't seen a close lower since. So you look at these little factors and you look at these little tidbits in price and what we're seeing in momentum, it suggests that if we get an objective break here, we are back on our way within resumption. So like I said, we're not out of the woods yet. We still need to breach these highs, but with the same respect, key support continues to hold basically for the last 2-3 weeks. Okay, so where do we go from here? Well, momentum has also shown a trigger break, test of that resistance as support, and let's see how we pan out today. But basically, the emphasis is on a break of this. Now, you're already seeing some people call for possible head and shoulders formation here. I see what they're talking about. It does have some merits. Here's the intraday chart, 120 minute. Let me get the 240 a little cleaner to show you what we're looking at. Left, head, right. Okay, so basically that would put a neckline break somewhere like this. Okay, we highlighted the breakout as 26.76 yesterday. I think that's still the zone to beat. Basic 50% retrace. That would clear last week's high, and that would clear the 50 line for this pitchfork in blue. I know there's a lot going on here, guys. There's 2 pitchforks. One right here, a modified. This is off the highs for the year from January. Saw a decent pitch at the 50 line. The median line, little messy, so I'm not really going to go crazy with this slope. Within that one, we've been watching this near-term slope in purple, okay? This shifted the focus or took off the focus from the short side. Even when we broke back in, again, key support 25.86 held once again into the close last week. And here's the rebound. So I think the levels are still pretty clear on this. You know, a 26.76 break to the upside is what would mark resumption. You look for 27.05, 27.45, 27.36, this zone up here. There we go. Again, you know, you look for near-term support at the low day close for the year, which although the daily closes have been on either side of it, guys, when you look in near-term price, here's what the daily close, the low day close for the year, still been a pretty decent pivot, right? Acceleration on both sides, some resistance, some support. You know, if we get a break back below there, you're still looking for 25.86. If we clear that, we're done. You know, there's a big possibility for a washout here. 200-day moving average there as well. So let me actually adjust that 200-day. Okay, so that's still your new S&P chart right there. Pretty tricky at these levels, pretty tricky, okay? But we're, you know, maybe some inverse head and shoulders here that would be, again, validated with a break above 26.76, and you'd be looking for a way larger recovery at that point, okay? Key support still 25.86. So know these levels in the SPX. Any questions on broader risk or any other asset markets for that matter? Okay, let's jump right into the charts then from last night. So before we do, I haven't presented any new charts on DXY this week. It's the same levels that we've been working with. Again, assumption that the analog may be taking back control takes us back into a bearish stance here. And, you know, largely speaking on a weekly basis, you're still looking for 88.71, 88.18. So the levels remain unchanged on DXY for the weekly charts. Daily charts look like this, okay? Nothing really to write home about yet as far as major support. On the near-term front, we are rebounding off a 618 retracement from the advance off the low that we made last week. This is actually last month. That stretch right there, the 618 is right here, 89.57. We made a low of 89.54 before pushing higher. So monthly open. Pushing to a monthly high. Let's see where the monthly low operates, but look for initial resistance back at this month's open, okay? Oh, this is not the open. There's the monthly open, which is right here. If you take a look to the left on the intraday chart, it reflects 89.96, which is a 38.2 of this range. Also the swing high that we made yesterday, or an overnight trade, basically. So looks pretty decent, guys, that we could be seeing a larger pullback here. The assumption for the look for 88.17, you know, 88.27, that region to the downside still necessitates a break back below the low day close, 89. You got the 618 here, the larger range from the advanced for that February low. This is kind of the breakdown zone, okay? But all things held constant, on a pullback here, if we are heading lower, should be looking for resistance at 89.96. Okay, you also have a decent slope there. We've been pivoting on both sides, right? Resistance, 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 break, support, support, break, acceleration, resistance, move lower. So I'm going to keep that slope in, you know, in view. Something to take note of. In fact, I think this was also close. But you get the picture. Then you got the lower median line parallels here and basic slope support off the lows. Those converge on that 618. So could get some kickback here, okay? Momentum's heading back towards 30. If we get a rebound, look for resistance ahead of that red slope line, ideally ahead of 89.96. Ultimately we're looking to see a reaction at 89.28. That's the next downside target, and that's the next pivot that we need to see to get that reflective move lower to those downside targets we're looking for. Okay. Any questions on the DXY? Momentum on the daily chart also, just looking at this objectively, guys. I mean, this is what we talk about time in, time out. It doesn't necessarily mean we're going to get the reflective move all the way down towards 88 again. But on the advance, the entire advance, you're wondering, well, is this the bottom? Is this the bottom? Are we just going to rip higher? The entire time, momentum has been unable to recover from oversold to above 60, right? These are just things that we talk about all the time that we look for as just a tell. Now, it could be completely wrong. We could come into this section here and rip higher and momentum rips above 60, and that would change things. But all things held constant, the momentum profile still remains in that, downward stance. I do think there are some pairs the dollar can actually, see some sort of more meaningful recovery. Obviously, we'll take a look at euro, but even the pound. Although, again, we've been loving the long side of the pound, generally speaking, still at these levels here and the way it's trading could be vulnerable for a little bit of a setback as well. So, don't be too surprised if you see a bounce in the dollar. On this initial leg, if there's fuel lower, look for resistance ahead of this high. Okay? Then you got the weekly open. Just look for 90.21. But largely looking for a move lower here on a bounce. DXY, going once, going twice. That is number 2. Okay, number 3. Let's go into yesterday's update, and it was a CAD extravaganza. Hope you guys like the little play on words. I was just all about the CAD crosses for some reason. They all look very interesting. We've been waiting for this CAD turnaround. Weekly charts have us coming to a pretty big level of support. 26.33 was the level that we were looking for on dollar CAD. It's the 100% extension, so 2 equal legs off the high, but also the slope here on the weekly charts. So let me just show you the live chart while we're here. Okay, the 50 line for this large formation we've been following since the 2016 highs, and that 100% extension off the highs. We'll see it closer on the daily chart. Momentum was approaching this slope support to former resistance. And again, the break there is encouraging to see continued move lower. But we're coming into support. Love where we reversed. Channel resistance in purple, slope resistance in red and blue, 618 retreat. I mean, it was just magnificent, right? Beautiful spot. This is really your sort of acceleration point where you need to break to get that last move towards at least slope support. You have the what is this? You have the 52-week moving average. Okay, as resistance. Also, that slope line from 2012 has been ridiculous on both sides. Support, break, acceleration, resistance, break, acceleration. Right. So that's where you look for objective resistance. Just giving you the bigger picture, right? It's the weekly chart. Daily chart for dollar CAD looks like this. Okay. Ever since the reversal off 31.32, that region that we were looking for where this thing perfectly peaked, again, just beautiful levels on divergence, followed by trigger break, the pullback. The major 2 levels that we've been talking about ever since that break was 26.85 and again, 26.33. The 100% level now also converges on the 200-day moving average. And again, that same 50-line slope we were just talking about on the weekly chart. So nice level, momentum coming into 40 or pressing below. Interesting area, could get a reaction or a rebound higher on a drop into this zone. But this is sort of the level I'm looking for right now. We'll have to judge what happens when we get there. It's been a pretty decent decline. Still, I mean, if this is wave 3 of a larger move, there's still tons of, it could still drop a lot. But this is the first level that you need to keep in mind. Okay, intraday looks like this. Even a near-term slope describing just the decline that we've been in. This is the same slope that we've been following. Okay, daily chart just went over that. We're here right now, just above this region. Intraday chart. Here was the formation we were looking for. We got the break of the 50 line. We talked about that yesterday. Keeps the focus lower below the 50 line. looking for a drop into the lower parallel 100, the 100% extension, 2633, 2634. Here's where we are now. Okay, here's where we are now. So, I mean, the lower parallel could offer support. It could be a slow dribble into the trade. Long story short, if you're holding short exposure, look for this range, take a little bit off the table, bring your stops to break even or better. If you're looking for fresh exposure, not the time to jump into new shorts, okay? In fact, I'd be looking for a near-term reaction off this. If we get a decent rebound, might not want to get aggressive on the long, but you could actually get a decent bounce. Ultimately, a downside break of a descending formation would be the sharpest part of the move. So if we clear 2633 on the downside, like I said, there's room to go. 786 would take us into those lows, 2435, 2450, 15 pip range there would be your next sort of objective target if you break 2582. But you get the picture. Let me see where that's 1618 comes in. 1618 comes in at the same level. So real clear targets, guys. If we were to break lower. First things first, we're coming into support. Watch 2633. Basically into the lows we're at right now, 2645, this region of support. $4 CAD. Levels remain unchanged. Okay, so initial resistance, you'd look right back to that same level we highlighted yesterday. 50 line, support, support, support. A little bit of a dribble, but when you broke it, you did accelerate. So I'm going to respect that line nonetheless. Bearish invalidation at the objective weekly opening range highs now. All right. Major event risk for dollar crosses in general is going to probably be out tomorrow with the CPI data that we're getting. So keep that in mind. We'll cover it tomorrow, 8:30 Eastern, live here in the webinar. Any questions on Looney? Okay, it's been a slow grind into accelerated move, slow grind into an accelerated move for the dollar CAD, but ultimately it's finally been turning off that major resistance level we've been watching. So, not a bad move. All right, let's move on to the other CAD crosses that we covered last night. So, Euro CAD looks like this. This is one that we've been following for weeks. You know, the last downside targets that we were looking for basically got hit. And it's been like a straddle situation ever since at that 50% retracement. Here's what the update looked like last night. And just to go back to where we were on this last week, you know, that downside channel had us basically looking for some sort of reaction low into that 38.2. And then the 50% was where we want to see a bigger move. We've just been straddling down here, kind of stuck now. Again, I'll bring your attention to the weekly charts for EuroCAD. Okay, a basic 38.2 retracement is 56.43 on a weekly basis. There's the median line. Big turn from resistance. That's what shifted our focus into this to begin with. Then we had a near-term channel. Channel break shifted us lower. This is the first area of contention for the weekly charts. Daily charts, same thing. There's that 38.2 median line, and we've been straddling on both sides. Now, some things that are interesting here. You know, Friday's outside day reversal close off of multi-week lows would typically be a constructive, and you see this in pound cat too, would typically be a constructive development in price, right? That would shift our focus higher, and specifically because it was a break below support, confluence support. You mean outside day reversal back through confluence support, momentum rebounded right off of, you know, seemingly right off of the false break below 40. So that would shift your focus higher. But the failure that we got yesterday in the pullback has me thinking twice, and here's what it looks like. Okay, even this near-term pullback, just this very near-term slope, we failed just ahead of that. Couldn't even make a stab at those lows. Big reversal move lower, right? And here we are right back through the weekly open, straddling once again. 56.44. Now, these are still the downside targets, 55.30 and 54.86. That's what we want to see this thing settle into on the downside. But seeing as how we turned, the way it turned, the one thing that you want to focus now is on basically the weekly opening range. The weekly opening range high takes us into 57.58, the same level we were watching. Weekly opening range lows, I'd be looking at last week's low. If we break to a fresh monthly low, we break to a fresh low here on the on this near-term decline, 55.30, 54.86, your next downside targets. So with what CAD's doing, that would be what to look for. With what's Euro's doing, well, we'll have to come back and look, right? Because Euro's kind of ripped in face right now. So interesting setup. I just wanted to highlight where we were. The levels remain unchanged from yesterday. Just keep it focused on this near-term channel. Weekly opening range taking shape just below those swing lows for the month look pretty interesting. So pound CAD, this is the one that was a little bit more contention, saw the reversal because where it happened was very interesting. So pound CAD did the very same thing. Okay, you had an you had an outside day reversal. I had to check this with the crosshairs, literally like fractional pips below, but it was an outside day reversal on Friday. This rally failed right at monthly open resistance, and that's something that you take note of as well. So again, off of multi-week lows, outside reversal candle typically will tell you it's an exhaustion move. You look for the move higher, but the sharp reversal off a meaningful technical resistance level like this as the monthly open resistance has me again back on the sidelines, right? Maybe there's lower to go. This is similar, right, in that we turned from major critical resistance. Here's pound CAD on the weekly. All right, 50% retracement from the 2015 decline, 50 line for the current operative slope, median line break, saw acceleration, boom. Here's support, 77.36, 77, 78.50. Big zone, you got the median line there, former swing highs from 2017, 38.2 retracement. So this is where your world right now for pound CAD, right? And we've been playing the short side ever since the reversal, or that's been sort of the bias that we've been looking at. Again, near term, it's actually been pretty clean. These are just some slopes from the parallels off the high. Offer some decent pivots in price, both acceleration on both sides. This is kind of tough, random one, but I wouldn't pay too much attention to it. But there's the reversal after taking out all their targets. The last target that we noted was 78.53 last week. We went right into it. This is where things got tricky. To open the week, you broke that channel or the upper parallel, but you came right into monthly open resistance at 80.95, turned right lower. And I said last night, if this is heading lower, any advances should be capped by 80.25. Okay, that would keep you within the realm of slope. That would keep you within the realm of a basic pivot in price, former swing highs, former swing lows. Failure in overnight came in at just ahead of 180. And here's the move lower again. Everything looks the same to me. You know what I mean? The only thing that looks different is the momentum profile. Ever since that low, here's the break and tap into 70. On the move lower, we rebounded right at 40. So if momentum recovers back through 60, it would suggest that you're seeing some sort of shift in near-term momentum. Again, 80.25 would focus more of a breakout type of play. So neutral here right now. You've set the weekly opening range, I think. Let's focus on that. All things held constant, you know, you're still within this downtrend. So both EuroCAD and Sterling CAD at very precarious levels after this initial move that we saw to start the week. But if CAD strength does prevail, as we said, dollar CAD has some propensity here to see some sort of rebound. So we'll have to see how this travels in the crosses, but ultimately, still do think you want to sell that. Okay, that's number 5. Number 6 from last night is Euro Yen. Here's what Euro Yen looks like. So I take you to the weekly charts. Okay, the level that we were focused on last night as the initial sort of peak would be 32.21. We're pushing through that right now. It's a basic 38.2 retracement. Now the reversal here turned off a very wicked area. Okay, this is the weekly chart. So you have the 200 long week moving average. You have the 52-week yearly moving average. Confluence there basically charged the rebound. Okay, and this is our third week of advances ever since we made that turn. So not really at a major compelling area per se on the weekly charts, but that 40 bounce in momentum, and we're still within the confines of the broader uptrend. Even these broader slopes, we've basically defended now. Here's euro yen on the daily. Okay, this is why I was so focused on this last night. It was because we were looking at a basic, pretty critical resistance region. Okay, here's the daily from last night. The level was 32.12 into 32.22. 32.12 into 32.21. Okay, that's the November low day close from last year. That's this day's close right here. Basic 38.2 retracement of this year's entire range. February, March decline. 200-day moving average. So you have a moving average consideration there as well. And slope resistance. Now this slope resistance, it has been pretty loose and fast. So I don't want to get too crazy about it, but it's there. Add to that, you jump into the near-term charts, basic downtrend resistance. Or basic uptrend resistance, excuse me, of the advance that we're in right now. Here's the median line for that formation we've been tracking. So if this break is legit here, you want to see further acceleration heading to the US trade session targeting 32.86. Here's the level from last night. Okay, we were right here. That was the major break point that we were looking for. That's the breach. As long as price stays above this, you're looking for the extension into 132.86. Okay, I think this is a pretty big level. Now, we have to allot that this is the abomination, right? We got some abomination mixed in with the euro. A quick reversal and a move back below 32.12 would certainly have me concerned, okay? Some sort of throw over false breach type of scenario. All things held constant, while above 32.20, you know, you're basically looking for a 32.85 tag. And that would be two equal legs off the low. So even if this is correction, you know, that would be the scenario you'd be looking for. Any questions on euro yen? My ideal scenario play. So yesterday we were looking to stay constructive while above the weekly open, looking for a tag into this region, but we were concerned. I thought you were going to get a bigger kickback off this for a move towards the lower parallels where we could get long again. So we rallied into it. Here's the break, guys. Price action speaks. Who cares what I think? If we continue to hold above 32.12, 32.20, look for a continuation extension higher. I'm not chasing this from here. If you're looking to get long, you are strictly gambling. The stop would need to be at least at 31.69. If you're okay with a 50, 60 pip stop, that's cool. If not, you got to wait for better entries. You know, the fade opportunity, in my opinion, it would be a very, very cautious fade if we do get it. If we get near 32.85, 33, I'd want to see what sort of price action does up there. Might be an opportunity to fade a pullback, but ultimately, you know, we're dealing with some major. This is the March highs. Again, slope resistance and that extension just higher. The 32.43. Let me highlight that actually. $32.43 and then 32.85. But the formation looks pretty clean. You bring up basic support to that slope again. And at this point, if you break the weekly open, you kind of want to bail on that as far as any dramatic pullbacks are concerned. Questions on euro yen? Okay, right on. Next up, $6 yen. Okay, we'll talk about dollar yen. Um, so here's what dollar yen looked like to start off the week. Okay. Listen, 107.50, 107.84. Those are the regions of which I would be looking for a larger reversal if dollar yen is heading lower. Weekly chart. 50 line here for the broader formation that we've been following hasn't been the cleanest thing, but again, on a closed basis, it actually has been very decent pivot in price. You have the 2017 low week close and the early Q1 low. Okay, well, this was early Q2. That huge pivot region basically is 107.84 into 108.10, right? 108.15. That's what we highlight as our major region of resistance. Remember, this thing broke a multi-year trendline support, multiple touches. There's the break. Here's downside. We did find that slope, that sliding parallel offered a little bit of a pivot higher. If this is moving lower, you'd need to see resistance here. Okay, so almost a yearly range that we broke, guys. This was the low we made in April of last year. Here it is in April, a year later. We're checking it as resistance. Momentum on the downside. It's only a 2-point touch, but when we did break it, we tested it as resistance. Again, could cap the momentum swing to the upside as well. Yeah, that's my validation point, guys. If we get through 108, I'm just not going to mess with this thing. I think it would be back on the resumption, back higher. You put it back in the range that we've been in since April of last year. So this is a pivot that I'm watching with great interest, okay? Here's the daily chart. Again, we're working with this near-term pitchfork off the highs. Upper parallel converges right in that 1618 extension. Again, all those same levels that we were looking at. You also have former swing highs back here from 2016. 107.50, 107.45. Those are the first level and what caught the highs last week. Now that same region converges on slope. 107.84 being just higher with those 2017 low day close. Not an outside day reversal. It's fractional off, but pretty strong reversal. Anyway, your topside swing, you look for some sort of exhaustion again at one of these two levels for dollar yen. Momentum is right at 60, knocking on the door. Here's what the momentum, or here's what the intraday chart looks like. So the slope levels are actually still pretty clean. And it's interesting because dollar yen's usually a pretty messy near-term slope, but follow this with me, guys. Basic channel resistance, right? If we take these two highs, a parallel of that slope basically caught the lows, almost to the pip here. So that break should offer acceleration, which we got. Pull back, 107.450 is that level that we highlighted on the daily chart, right? We just looked at it. There's the pullback, former slope resistance, turn support. Here's the pull and move higher. Turn in momentum, probe just below 40 and pushed higher. So look, I'm inclined to still think you have near-term upside in dollar yen. Not surprising as the dollar sell-off, the yen sell-off basically intensifies, right? It still carries dollar yen higher. So 107.50, 107.84, still the same levels. If we get into 108, 108.04 ends up being an exact 100 off the low. Okay, so on a stretch, okay, fine. But the basic theme for me is, yeah, the immediate focus may be higher, but you're looking for steam, real exhaustion at this region right here between 107.50 and basically 108. So as we always do approach this thing with so much respect, we have to just let it pan out. I don't think it's worth kind of pressing a trade on it. If we do get a spike into that region, specifically if it's something quick and emotional on some sort of tariff nonsense, it might be worth a fade opportunity from those levels. But I'm looking for a turn. I'm looking for a move lower. The immediate threat is still for this thing to push higher first. Does that make sense? Would be the ideal scenario. Okay. So that is dollar yen number 7. Any questions there? Slope is actually pretty clean, so keep that your guide for now. Euro number 8. So we highlighted this on Monday. We really were talking about the fact that the weekly chart we've been looking at for Euro, guys, hasn't changed for months. The upper median line parallel for the slope that we were following off the 2015 lows continues to be just super perfect. You know what I mean? Again, resistance, break, acceleration on a closed basis. Mind you, the intra-week stuff. On a closed basis, doesn't get much closer than that. You know what I mean? So, look, I'm not saying that Euro is going to hit the 25.98 target or that we're going to shoot up into the sky, but basically, this is the pivot that we were looking for. This is support. If we break below this support, and mind you, also basic channel support, then yeah, you look for that spill in 21.67, if not much lower. Momentum, that's as contentious as it gets to a 3-point trigger. There's a lot on the line here for euro dollar. Okay, so there's the spike into that channel support, and that's holding. You're basically looking for this consolidation to really give way. Now, it looks like at first shot, this advance here may be something to really focus on. Here's the daily chart. Again, basic trendline support just off the lows from November is the same slope as basic trendline support off the April low of last year. So again, that symmetry. It's April 10th was the low. It's April 10th, 1 year later. Okay. Here's the rebound and push higher, making it through the week, the initial monthly open and the initial monthly opening range highs. And the perfect hold of ahead of 40 in momentum. Everything here still looks on point. Now, I wouldn't necessarily say this is a break the consolidation, right? But certainly it's a start with a support bounce off a pretty big level. This is also the 618 extension of the decline. Boom. Swing lows that you made for March. And again, that confluence with that trend line. So here's what it looks like on the intraday chart. Again, sorry, snap all those levels for you. So then that's November, that trend line from November. You did see there last week. That's where we struggled, pushed higher. We closed higher in the week. We opened the week looking at this near-term descending channel formation, okay, saying that this was a big support. We break higher from here. You're looking for 23.20, looking for 23.46, but 23.46 is where I'd start to look for exhaustion for a move lower. So you got the breach, it ripped, you got both those targets, but it even took out the 618. So it even broke here and took 23.76 before pulling back. What do you do at this point? Kind of need to sit on my hands, okay? Not interested in chasing any fresh long exposure from here. If you got out early at 23.46, you're not going to catch the whole move. You never will. So we have to look for a possible reentry. Now, for me, I do think once it recovers back from oversold condition, you actually risk a larger pullback than something like this, where you'd want to still play this upswing, right? Because you're starting to get into overbought territory here. So, you stay constructive above 23. Topside targets unchanged, 23.76. Beyond here, the 2018 high day close, 24.09. Okay, and then the upper parallel. But I'm still, this is still a problem for me, this little region here. Look for a close, at least on a 60-minute. Did we get a 60-minute close above? We did get a 60-minute close above. Because it's been a decent pivot, you know what I mean? Resistance, support bounce, the break, acceleration. So I kind of don't want to see a lot of stickiness here. That would suggest you risk a little bit of pullback, then you buy that pullback. So we'll see here. Also note that you are, marking divergence with just the highs from this week. Boom, boom. So not the time to chase any long exposure from here. Our interest was for the possible move into 23.46. Now that we're trading above that, I think you kind of need to reset the gears for a little bit. Any questions on euro? Ultimately 2409 is what you'd need to break to mark resumption, push like the larger resumption of the trade. Till this, you might be just traveling to the other side of the range. And it might just completely, again, pull back from that 2409 level if you do get that tag. So don't get overzealous on this just yet, but 2376, 2409, near-term resistance targets on euro. Questions, comments, concerns on euro? Okay, that is number 8. Number 9 is Swissy. Make or break is what I have written down on this. So here's what, excuse me, guys, Swissy looks like. So 94.50, okay, was the last target that we had on mind for the pullback. Again, this one made a beautiful reversal last week. We talked about this. Outside day reversal on Friday, right off of, right ahead of the 200-day moving average, median line or 50-line resistance there. Move lower, had us basically looking for initial support at last week's high day close. And then right here is basically slope. Same slope support, parallel of that low, comes in right here. So near term, that's sort of make or break. Note the momentum signature to the downside on the break of yesterday's slope. There's your momentum support pair. It's a 3-point touch, 1 point, 2 point, 3 point. Legit trigger, right? Not in of itself a reason for us to stay short, but definitely the implications on a move lower are validated in momentum. Intraday looks like this. Okay, even cleaner. So this is the same levels we've been looking at for a couple weeks now on the upslope as far as Swissy's concerned. Here's what it looked like yesterday, or on the start of the week. They had the 200-day moving average, the slope that we made. We talked about the ongoing divergence into the highs on Friday before turning. So as long as we stayed below this near-term slope and momentum, you're essentially looking for some sort of bounce to fade. And again, our last target was 94.50 or 95.40, excuse me. That's where we are right now. So this setup, for all intents and purposes, is basically you got to sit on your hands here. Okay, you are marking, or let me take that back. It is sort of, it will be divergence if this holds here, but at the end of the day, that doesn't matter. At the end of the day, we're coming into that support structure, and we have to be looking for a reaction. A break below the April open, so objectively, right, would sort of validate the move, in my opinion, or the break of that slope that we just talked about, the upslope that we've been working with off the yearly lows. If we break the April open, I do think you spill lower towards 94.73. Okay, that would entail a lot of Swissy strength. But those are just the levels that come out if this thing continues to move lower from here. So could be a decent play. I'm not sure how you would approach it if you're not already short. If you are already short, guys, a swing against or a stop against the March high day close, 95.63 is the prudent play. Against the weekly highs, or against the swing high here, excuse me, would be the more conservative play. A break, or if you're looking for fresh new exposure, this might offer actually a fade opportunity. If you get a spike into the April open and it holds, and then we recover back into 94, 95.40, I'd be comfortable taking a stop against that for a rebound higher, real near-term stuff. That being said, the implications of this break near-term are for a drop near 94.73. Dollar Swiss at support, bottom line. Okay, and that is number 9 on this session. Guys, do let me know if you have any other specific questions or trade setups you want to look at. A lot of interesting stuff, but pinpointing some near-term entries, even for me, has been very tricky. Sterling, I know everyone's been looking at what's been going on with pound. I just think it looks a little bit tired. It's approaching that median line once again. You could see some pullback here. Momentum's an overbought on the near term, not when I want to fade. You know what I mean? It could stay in overbought for the next 3 hours and rip still higher. And the next level that I have on the intraday is 42.10, 786 retracement. It's from the yearly high. But yeah, I mean, that slope near term has me a little concerned. And even if this is sort of a 1, 2, 3, 4, 5, suggest your risk for a little bit of a pullback here before resumption. So just be cautious with the sterling. You want to take a little bit of a hands off here. Oh my goodness, JR, Aussie. What am I talking about? Tom, same thing with you. You guys caught me on that. So that's sterling. Any questions here? We have to go over Aussie. Is the low in? What do you guys think? So, you know, if it is, I'm gonna be pretty ticked off because I've been waiting for this turn. I've been talking to you guys about it for literally months. 76.36, 76.35. We allotted 76.12, which is the 100% extension to the lows here, 1618 extension to the lows, is where we're looking for as far as major multi-year confluence support. Not going to go over it all over again. Momentum coming right into the 40 barrier, basically turning just ahead. Not out of the woods. Dagon says, me too, right, man? Yeah, I don't think we missed it. Just wait. Dagon, this is your line in the sand right here, okay? 76.50 is a huge region, okay? It's the opening range highs for last year. It's the 52-week moving average, the long-running 200-week moving average, and that pivot in price all right here. Okay, so we're not out of the woods yet, but I do like the upside. So again, 77.50 being your line in the sand, that's your first level. This is the level we were just talking about in the weekly charts. You can see again reflected here on the daily, really clean, right? 77.80, you have the 100-day moving average converging with this low swing that we made here. Very decent pivot in price. 78, the upper parallel. But we were, this could be it, guys. This could be a lowered floor, very similar to a raised ceiling when you turn right ahead of resistance. Typically a real exhaustion play. This could be it. We never got the probe into 76.36 to complete that 618 retracement or that slope. But the entire way down, we noted divergence, right? Price action making a lower low, the oscillator making a higher low. We talked about the trigger break, right? I already removed that, but just to draw it for you once more. Excuse me. And so the reversal has merits. Now, near term, guys, this is what we're focused on. Obviously, this is the chart that I've been sending over to you guys a million times over. Is this near term channel? We opened up the week saying, look, we're right here, right in the middle of last week's range. You either want a topside break of this channel and a pullback to get long, or the ideal scenario, you still get the dump into 76.36, 76.45. It's the level that we were looking for on last week's low, and that is what caught last week's low. So look, objectively, here we are, topside break, 3-point resistance trigger. We talked about 77.13, that was the 100% extension, confluence 50% retracement. We got a pivot on both sides there last week. Here's the breach, acceleration, pullback, and failure. So 77.50 still the level to beat, okay? Daily chart, weekly chart, what have you. That's the region to beat on a weekly close basis to get this thing going. Pooja says there is too much overhead, even if the low is in, should get opportunities to enter, I think, Aussie dollar long. I completely agree with you. There is a lot overhead. And Pooja, the other thing I do want to note is that, when you look at the COT data, when you look at IG's client sentiment index, and you just look at how many people are stacked on the long side, it is starting to become concerning, okay, that you're getting all this flush to the long side, right? It's not typical of something that we actually want to see. So if, we want to be watching that as closely as well. If they start to pull back, okay, long exposure starts to wane, that would be actually constructive to me. Because remember, I don't want to complicate things. If we start to pull back in sentiment, that would be something that would further fuel, in my opinion, the upside as people try to come in and fade it, right? Market doesn't reward the masses. 120-minute Dagon. Yeah, let me get that back for you. What were you saying now? Pull back to upper parallel trend line, or is that too risky? You talking about this? right here, Dagon. Yeah, that would be the ideal play. Remember, your ideal play is always going to be a break of resistance, test of it as support, then move off, right? But the markets don't work in a vacuum. And like I said, this exhaustion turn here and move higher, um, I think that's the pullback that you would have wanted to see touch that. Do you know what I mean? So I don't quite think you get down there from here. Let's see if we can find some upslope. And this is a good drill here. So when you see a turn like this, you want to put color to it, right? I want to kind of get some levels figured out, and see if there's any merits to any kind of upslope that we can work with. So let's just play around with a couple of things. It's not always a pretty process, guys. Well, that would highlight 7750 again. Not the cleanest, though. 50 lines, decent resistance break. That would put targets up here into more focus. Actually, it's a nice swing high. Might be a decent level. Okay. Again, that would highlight near-term support, exactly what we just said we would have wanted to find support right here. And let's just see basic slope. Maybe that sometimes offers the clearest picture. Okay, it's going to be a false break type of move. That would put you up here. Okay, so I mean, there's a couple of different ways you can view this. At this point, I would want to say that it has an objective constructive view above the 77 handle. You know what I mean? That's basically what you were looking for. That's basic support. I wouldn't be looking for entry there, Dagon, but that would be where, if we broke below, would shift my opinion, right, to the risk for a move higher. Does that make sense? Pitchfork near term on Aussie. Pooja says March 29th low, 30th March high, and April 9th low seems to have decent touches on center line as well. All right, give me one sec. April, what is that? March 29th low. So you're talking about this. Isn't that the one I just drew, Pooja? You saying you like that one better? March 30th high. And the 9th of April low. That could be pretty decent. In fact, that would put the 50 line at the highs that we're making here. Either way, Pooja, what does it highlight? 77, 77.13, right? And this just gives me further conviction. I love when we have different structural formations in price that all highlight the same level, right? It all comes back to the levels. It's all we're doing when we're trading is we're trying to find these regions of confluence, resistance, support. So I'd be with you on that. Same thing. Guess what the upper target highlights? 77.80, that 50% retracement, former swing highs, yet again. Yeah, they both look pretty good. Both look pretty good. Questions on Aussie? Again, just for reference, I think Pooja makes a good point here, guys. There are a lot of stacked upside targets here. So you're likely to get a lot of kickback. I don't think you're going to go straight shot to the moon. All things held constant. Looks pretty damn good. Any questions on Aussie? So that was number 8, 9, 10, and 11. All right, guys. Well, that's all I've got. Any last minute requests, feel free to throw them on. Otherwise, we'll go ahead and wrap it up here. See you guys bright and early tomorrow morning for another day strategy webinar. I still haven't figured out the schedule for late April and May, guys, when I'll be traveling through Asia Pacific. So me and Jamie will go back and forth. He might pick up an extra webinar or two during that 3-week time span. So bear with us, but we'll keep you updated always on the SB Trade Desk homepage with that schedule. Can you review Euro Sterling? I missed that. Ruth, here's the Euro and Sterling real quick. So the Euro, like I said, the last upside target that we had was 23.46. I really don't know what to do from here, Ruth. I'm not going to chase this any further to the long side. I do think you can get a larger setback from here. Ultimately, you're coming off of a huge support. Like I don't want to necessarily start marking resumption. Okay, looking for 26, 25.98. But at the same time, I was telling the guys on this stretch right here, you're an overbought. It could continue to rip, so I'm not going to try to fade it. But at the same time, there's no risk reward here as far as trying to get in the long side. You're sheerly gambling, okay? Because it just made a huge stretch. So you have to let this thing settle a little bit. I do think that we've come off a big support level, and if we hold above the first test, okay, would be the monthly open. If we come into monthly open support and that holds, you look higher. Next topside target is 24.09. That's kind of the big region of support I was talking about. For Sterling, it's a very similar scenario. Unfortunately, Ruth, on this one, I do think you risk a larger pullback. The style of which, the wave count of which it ripped to the upside, the levels, I still think you can probably reach into 42 on a stretch, but ultimately I think it's a fade. You made a break of a decent downslope channel resistance. It accelerated. You took out the 618. You're heading back into slope on every time scale. This is the longer term median line formation we're following on the daily. Same thing on the weekly. Okay. You could encounter resistance right here, if not just higher. 42.40 is going to be that 200 long week moving average. So yeah, maybe a little bit higher instantly. If you're holding along, I wouldn't be shaken out, but I do think you get near-term exhaustion some point in Sterling. If you notice, I haven't highlighted it, yet this week. I do want to let this thing pan out a little bit. Broadly speaking, we're bullish. If you're holding anything longer term, Ruth, nothing changes. But I do think on the intraday, this thing does exhibit some, factors that suggest you could see near-term exhaustion on the near-term front. Ruth, does that help? Once you get the exhaustion turn, okay, get a little bit more of a momentum break, a divergence move, tack on a quick retracement, see where that comes on this slope. So let me actually just clean up these levels for you right here while we're at it. So this is actually the 786 retracement of the range off that high we made last month. That's what you'd want to see hold as support. Yeah, watch this. So again, one last exhaustion push maybe here. On further divergence trigger break, you get the pullback, look for support around that slope, and that would be really the determining factor. If you break that again and you look for a larger recovery, tack on an extension off this decline here, and you look for the downside targets. I don't necessarily think you correct that much lower. My initial focus right now is just for a near-term exhaustion pullback. Where that settles will tell us what our next move is. But just not something that I've been really interested in trading near term. Okay. All right, guys, 9:30. I'll wrap it up here. Ruth, cheers. I got to go as well. Have a great trading day, and I will see you all tomorrow. Cheers.